Have you ever wanted to understand the actual pulse of the market, on a week-to-week basis? Well, you're in the right place. We're about to decode the market's weekly rhythm with a really powerful framework for short-term trading. All right, welcome to AI Explains ICT. Today, we're diving into the core content for Month 7, Episode 1. And this month, it's all about short-term trading, which ICT actually calls his favorite, his go-to discipline. So you're definitely going to want to grab a notepad for this one because we're going to cover some key concepts you'll want to remember. So here's what we've got on tap. First, we'll break down what short-term trading actually is. Then, we'll get into the main tool for all of this, the PD array matrix. After that, we'll build out a top-down framework, show you how to spot the weekly setup, and then we'll finish with a killer confirmation signal that ICT says is the telltale sign you've got a tiger by the tail. Okay, first things first. What exactly are we talking about when we say short-term trading? Let's get a really clear definition down so we're all on the same page. So when ICT talks about short-term trading, it isn't just random day trading. It's a very specific discipline where trades last anywhere from a few days up to a full week. And here's the crucial part. We use the big picture, the monthly and weekly charts, to figure out which way the market wants to go. The absolute backbone of this entire strategy is understanding and forecasting that weekly range. So why focus so much on this style? Well, according to ICT, this is the highest probability discipline in his entire toolkit. You get frequent setups. They literally form every single week. And it doesn't matter if the market is trending hard or just bouncing around in a range, this works in both. This means you have a consistent flow of really high-quality trading opportunities. All right, so to navigate these weekly moves, you're going to need a map. And for institutional trading, that map is called the PD array matrix. This is, without a doubt, the core tool for this entire method. So what is it? Well, you can think of the PD array matrix as a structured list of specific price levels that institutional algorithms are programmed to pay attention to. The whole idea is that price isn't just moving randomly. It's constantly traveling from one of these key levels to another. And this slide right here, it lays out the core concept perfectly. See, the market is always in one of two states. It's either at a premium, which you can just think of as overbought, or it's at a discount, which is basically oversold. Price is always seeking to move from a premium level, like one of these red ones up top, down to a discount level at the bottom. And of course, the reverse is true. It'll move from a discount all the way up to a premium. This is the engine that drives price movement. Okay, so we have our map, but how do we actually use it? Well, this is where the top-down framework comes into play. We're going to start with the big picture and then drill all the way down to find our specific trade. The process is really systematic. First, you look at the monthly chart and find a key level that price is reacting to. Is it at a premium or a discount? This gives you your long-term bias. Then, step 2, you look for an opposing level on the weekly chart. That becomes your target. Once you have your direction and your target locked in, you scan the lower timeframes, the weekly, daily, and 4-hour, for a good entry point. And finally, you pull the trigger and execute the trade on the 1-hour chart. Let's walk through an example of a sell program. Here, our analysis starts on the monthly chart. We see the price has hit a premium array, suggesting it's overbought and likely to turn down. So our main objective, our target, is a discount array, way down on the weekly chart. That whole area between the monthly premium and the weekly discount, that's our trading playground for the next few weeks. Now, what's really cool is that this isn't just a one-and-done trade. As price makes its way down to that big weekly target, it's not going to move in a straight line. It'll create smaller pullbacks along the way, and those pullbacks will often run up into smaller premium arrays on the weekly, daily, or 4-hour charts. Each one of those gives us a new opportunity to enter a short-term sell trade, all of them flowing in the same direction as that big monthly move. And for a buy program, well, you guessed it, it's the exact same logic, just flipped upside down. We start with price hitting a monthly discount array, a really deep oversold level, and we target an opposing premium array on the weekly chart. The space in between those 2 points is where we'll be hunting for our buy setups on those lower timeframes. Now, it's really important to make a distinction here. The bigger framework we just talked about, the monthly to weekly one, that can set the stage for weeks of trading. But ICT's signature setup, the one he calls the one-shot, one-kill, is a much more condensed version. It operates on a weekly to daily time frame, and this is what he calls his bread and butter, because it delivers incredibly high-probability setups almost every single week. So the one-shot, one-kill uses the exact same logic, just on a smaller scale. For a sell, we'd find a premium array on the weekly chart as our starting point, and our target would be a discount array on the daily chart. It's a much more focused, contained setup that lets you capitalize on the main move of that specific week. Now that we understand the key levels, let's talk about timing, because it's not just about where price goes, but when it gets there. There's a very distinct rhythm to how a typical weekly range forms, and that's what we're going to break down next. You can think of the weekly price cycle like a little three-act play. First, you have the impulse swing. This is where smart money reveals its intentions and gives the first big push in the direction of the weekly bias. Then comes the retracement, the pullback. This is the key part for us because it creates the opportunity to get in at a better price. And finally, we have the expansion swing. This is the main profitable move of the week where price trends towards our big picture target. So here's what that looks like in a bullish market. Let's say we expect the week to move higher. We'll first see an initial impulse swing up. That's smart money tipping its hand. Then we patiently wait for a retracement, a move back down. This pullback should happen between Monday and Wednesday and, ideally, dip into a key discount array during a specific time window ICT calls a kill zone, which is just when volatility is expected to be highest. That's our spot. That's our entry point before the real expansion kicks in. And for a bearish market, it's a perfect mirror image. We get that first impulse swing down, showing heavy selling pressure. Then we wait patiently for a retracement back up into a premium array. Again, sometime between Monday and Wednesday and inside a high volatility kill zone. That's our cue to look for a short entry and ride the big expansion swing lower for the rest of the week. And this brings us to the final and maybe the most powerful piece of this whole puzzle. This is that confirmation signal ICT was talking about. The key that tells you, yep, a big move is very likely underway for the rest of the week. So the million-dollar question is, after all this analysis, how do we get that extra layer of confidence? How do we confirm that we are really in a strong buy or sell program for the week? Well, here's the answer, straight from ICT. He says that in a bullish market, when price breaks above the high that was formed between Monday and Wednesday, that break acts as a powerful confirmation that the market is in an aggressive buy program. So let's break this rule down into a few simple steps. First, you just define the high and the low of that Monday to Wednesday range. Now, for a bullish confirmation, if price breaks above that high later in the week, usually on a Thursday, that is a huge signal that price is going to move aggressively toward your weekly premium target. And for a bearish confirmation, if price breaks below the Monday to Wednesday low, that confirms a sell program that's targeting your weekly discount array. And this chart just brings it all together beautifully. You can see the Monday to Wednesday ranges highlighted there. In this bullish trend, just look at how the low of the week is consistently made inside that initial MW window. Then, as soon as the price breaks the high of that range, boom, you see an aggressive expansion upward. This isn't just a coincidence, it's a recurring pattern. It's the weekly rhythm of the market in action. And that's our look at ICT's short-term trading model. If there's one thing to take away, it's that the market week is not random. It has a predictable rhythm. So the next time you look at a chart, ask yourself, are we at a premium or a discount? And where did that Monday to Wednesday high or low form? If you found this video helpful, please do us a favor and hit that like button and subscribe for more. If you have any questions at all, drop them in the comments and an actual human will get back to you. Stay safe out there and happy trading.